All right, scholars, we're now going to take a look at this particular company. And what we have is we have both what we'll call the balance sheet, and we have the statement of changes in net assets. If you want to think of it as an income statement, that's fine. And the assets should be broken out into those assets which are presented at fair value. So you would break those out first. Then you would show receivables. If there was cash, you would then show that. And then, of course, at the very bottom, you would show liabilities associated with it. So therefore, you would show your assets, and that's typically first category, investments at fair value. Then you would show the receivables, then cash if there was any, then the liabilities. On the other side, you have the statement of changes. That would be your additions for such things as investment income, appreciation in fair values, interest and dividend income, then interest income on notes, receivable from participants, such as contributions from employers, participants, anything that's been rolled over, that's total additions. And then, of course, your subtracts, which would include benefits paid, administrative expenses, etc. You would then come up with what the net increase is this year. In other words, think of it as the net income. You would then sit there and you would take a look at any transfers that occurred, subtract them out, think of that as dividends. And then you would take the beginning of the year balance, and then you would then take those, aggregate them up to come to the end of the year. So think of it like retained earnings for just a moment. You would take net income, then you would subtract out dividends. You would then factor in the beginning of the year retained earnings to equal the end of the year retained earnings. And if you'll notice on the balance sheet side, all your investments, you have employer contributions would be a receivable, participant contributions is a receivable, any notes receivable from participants, etc. Your liabilities would typically be the accrued expenses or excess contributions payable. So those are the classic items that would be presented in this category that you should be familiar with. And of course, then when you have your total liabilities, it then aggregates up to the net assets available for benefits. And you'd have both last year and the current year presented. So this is a good refresher of what it looks like. And you can see from the arrows we have how you had last year's net assets available. Think of that almost like beginning retained earnings plus this year's activity, income minus dividends, equals ending retained earnings. Think of it that way, and it's a little bit easier to understand this whole flow and formula approach.